Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of November the 27th, 2017. Now, to get started this week, we're going to begin where we always do with that all-important US dollar index. Now, the dollar coming under pressure basically on Wednesday in ultra-thin illiquid markets, but largely based around comments made by the FOMC about inflation. But in my respectful opinion, this is more than likely just a way to balance out the dollar's strength and weakness against some of the major currencies. But when we look at the indicators from VantagePoint, we had basically a warning sign that the medium-term downtrend was weakening. As you can see, I've drawn a line. We recovered here, but then failed basically right at the 18-day predicted moving average, that coming in now at 93.68, and we're starting to push lower. Now, the one thing we want to look at here is, again, oversold conditions. When we see a big move down like this in ultra thin illiquid markets, usually the move is false. So we've had a very big move down on the Wednesday. We've continued to move down on Thursday and Friday, but again in thin illiquid markets. Now, when we're looking at this and the dollar index, the oversold condition is one issue, but when we combine that with direct intermarket correlations, we can assess that gold is struggling to make any kind of move here. We've had a big move up after the FOMC announcement, but we're basically dead flat ever since. Our neural index is higher, but our medium and long-term trends are basically dead flat. So when we look at our predicted MACD to assist with direction, we can see that we're failing at the zero line, and on the 60 level on the predicted RSI, we're not showing any real momentum. As long as gold holds below $1,300, then that would signal that the dollar still could recover here. So really, for the dollar to break out to the downside and to really see active selling in US dollars, we need gold on a sustained break of 1,300. Now, looking at oil, I would say that that's very unlikely, and looking at the S&P 500, it's even more unlikely. When we look at the S&P 500, the high correlation it's had to the US dollar and the inverse correlation that it's had to the euro, the S&P continues to move higher with yet a fresh move higher, with the medium term crossing over the long term predicted difference, which is fully supported by the neural index and the predicted RSI. Now, the predicted RSI moving towards overbought territory, but an overbought signal in the equity markets as of late certainly has meant very, very little. So when we look at all of this and we look at the euro currency, the first thing I want to point out, as I've talked with my own direct clients, is we've had a big move in ultra thin liquid markets on the Friday. Now, we've had a test of the 18-day moving average, and we've come up, hit that level, but then we failed and then started to move higher on Thursday and Friday. So the euro, looking at the predicted MACD breaking above the zero line, there could be a bigger signal coming. But as you can see, when the RSI has hit these upper levels, each time the euro is basically sold off. So once again, I believe that a large bulk of these, the bulk of these moves on the euro have come because of the FOMC statement. But I'll further point out that the euro is certainly in not any better shape here. There's a lot of political uncertainty around the eurozone right now, which I believe will contain the eurozone strength. Now, you can see that after this break, I've drawn a line in here as a potential price target off the next swing high, which is a very significant resistance level at 120.50, and the market has repeatedly failed in this area. So combining that with somewhat of an overbought condition, the euro is not likely to break out to the upside next week. This should contain Swiss franc on the downside as we also move into oversold territory here. But I'm watching that VantagePoint predicted MACD very closely to see if we can break below the zero line, which would trigger a longer term trend to the downside. That is not confirmed, and the main trigger for that will of course be gold moving higher in order to strengthen the Swiss franc. Now, as we look at the British pound for next week, I had talked about this extensively in last week's Forex Weekly Outlook, that a larger buy signal is forming. However, we've stalled yet again at this 133.50 area, and the VantagePoint medium and long-term predicted difference is still struggling to confirm that we're going higher. Now, our neural index is up. This is, again, a very important signal, watching the predicted MACD to see if we can push above the zero line. Now, case in point, the last time we did this, and we had a signal very similar with the 8-day crossing over the 18-day, this led to a move from 129 all the way to 136, a very, very significant move. Could this be the same signal forming again right now? It is absolutely possible, but we would like to see a little bit of a corrective move first. So that corrective move would probably be down between 132.68 and 132.23. Now, after that corrective move, then we can look to see if the British pound can continue to move higher. But once again, gold is going to be a dominating, and commodities like oil are going to be a dominating factor, whether the British pound can strengthen or not. And right now, my optimism remains guarded. The immediate target that we need to clear is 133.50. That should open the door back to the 136 area. But be very cautious in early Sunday and Monday trade here for false breaks, because again, we're not getting the kind of confirmation we were looking for with the medium and the long-term predicted difference. They're basically moving sideways, as is the predicted RSI, which tells me that there isn't a lot of upside momentum here. Now, as we look at the dollar yen going into next week, this is basically an equity trade here, guys. So if the S&P 500 can stabilize and continue to move higher, the dollar yen will recover off this 111 area. You can see the VantagePoint medium and long-term predicted differences are starting to rise back to the upside, but the position of the predicted MACD, very, very concerning here. This could lead to a bigger move, but our predicted RSI heavily oversold, running out of steam here. We're likely going to correct next week back towards this very important VantagePoint 18-day predicted moving average at 112.64. This is this dark colored blue line here in the software. So if we correct to this level and we fail again, that will signal a bigger move back to the downside on dollar yen, but that's going to take an equity market sell-off for that to happen. Now, as we come into our three main commodity currencies, USCAD appears to be forming a sell signal off here. You can see that the medium term crossing over the long-term predicted difference crossing below the zero line. I've then drawn a resistance line up here. Our key vantage point level, 127.31. That's the area we want to watch very closely to begin the week. If we're holding below that area, and I'll point out that we did have a very bearish close of 127.03, and we're getting our 8-day crossing over our 18-day, this is all telling me that we are probably going lower. The problem, guys, again, is that we've had a spike in oil prices in thin markets on Friday, and the overall bias for oil is still pretty much to the downside. So if oil can keep moving higher, then the USCAD can move lower. But if oil starts to sell off again, USCAD is likely to move higher. But right now, selling into this 120.28 level is a reasonable play. Now, in last week's Forex Weekly Outlook, I talked about a signal forming from VantagePoint here, the medium term crossing over the long-term predicted difference to the upside. I've drawn a support level here. We can assess where that is. The problem here is that if gold and the US dollar is really this as weak as what they're making it out to be, then we would have taken out this VantagePoint critical 76.32 area, the 18-day predicted moving average. That didn't happen. And you can see for the last 3 days in thin illiquid markets, we have been holding this particular upside resistance point or a pivot area. So this is an area we want to continue to watch this week. But the indicators from VantagePoint, again, are very mixed. When we combined the moving average with the momentum indicators, we're losing momentum on the RSI, but we do have a crossover on the predicted MACD, but the neural index is down. So again, we need a clean break of 76.32, guys, and the way we get that is via gold. gold breaks above 1300, takes out that resistance zone, closes above 1300 for a couple of days in a row, that should send Aussie US higher. But without gold moving higher, Aussie US is likely going to fail. The same as New Zealand US, the exact same signal we can see in Aussie US. These two charts are almost identical here. So the 69 level is a big level on New Zealand US, which we need to clear. You can see that after the crossover from the medium term predicted difference, I've drawn a support area down here at 68, but right now this is pretty much the range we're dealing with between 68 and 69. If we can break 69, that will trigger a much bigger move to the upside. But again, guys, we need to watch gold contracts very, very closely next week. If we're not seeing upward momentum in gold, then we're not going to see downward momentum in the US dollar. So with that said, this is the Forex Weekly Outlook for the week of November the 27th, 2017.